All right, welcome, my fellow capitalists and stock pickers. This is Rick Action Jackson, the growth stock guru. Thank you for joining us today. This is a world of education on how the top quintile strategy works, which is a strategy that focuses exclusively on companies that are beating Wall Street forecasts. In my opinion, that's one of the most consistent ways to make good money in the market. This is not financial advice. This is education and entertainment. If you want to use any of these ideas to grow your wealth, be certain to consult your financial consultant to see if the stocks match your risk tolerances and your goals. Stocks are risky. You can lose money. So welcome to a Small Cap Friday. Get out your cowboy hat. We got three very exciting stocks here today to talk about. They're all small companies. I tend to focus on large companies because you can usually contain the damage on the downside if you're wrong. Small companies, when they do not meet expectations, can drop a lot quickly. This is the world for the bold. If you're not bold, don't even consider any of these stocks, even if your financial consultant says he's okay with them or she's okay with them. Okay, so first up is a company called Tenable Holdings, ticker TENB, closed just a few pennies under $28 last night. It's a very exciting story. In the world of software, there's pretty much a consensus on Wall Street and in the consulting world that the companies that battle internet hacking and attacking of computer systems is going to be the biggest growth market for the next 5 years. In 2025, America spent about $40 billion on these types of software as defense against malware and internet hackers. It's expected to grow to a $300 billion industry in less than 5 years. That's about a 50% annual growth rate. The artificial intelligence tools being put out there these days has created an orgy for the internet hackers. They are armed to the teeth now, and they don't have to be a big operation to do that. So you're seeing all the big corporations out there almost double their internet security software systems because they need it, and they need it badly. Some of these artificial intelligence tools are so good at finding the cracks in your enterprise system that the White House is not letting them sell the software. They're making sure that they get to see it first. They're making sure the CIA and the National Security Agency and the Pentagon is well prepared for this, and they're making sure our banks are well prepared for this. The latest state-of-the-art program to come out of Anthropic is called Milo. It didn't say who it was, but it said one of America's top 10 banks. They found 37 ways to infiltrate the system in just a 2-hour analysis of the bank's software system. Now that bank has plugged all those, and that's what the White House wants to happen. They want it to very important organization for them to plug it before it will become available. But you put this in the hands of some hackers, or you put this in the hands of the Chinese or the Russians or the Iranians, these programs could really do some damage out there. So this is a very exciting field. This field is going to boom the next 5 years. Tenable Holdings is one that a lot of people have overlooked. And I think the reason they've overlooked is that the company very consistently grew at about 12 to 15% a year for 5-6 years. Their customers are 50% government agencies and 50% companies that are in the private sector, but most of them have top security clearance from the government. This area, I think, will be buying this stuff faster than the private sector because the Pentagon budget's exploding, and a good chunk of that is going towards these type of software systems. The president asked for a $1.5 trillion budget next year for the military. The military's budget last year was $1.1 trillion. So that's a 35% increase. So let's look at the chart on this one. You'll see if you go back to April of 2022, I got a 5-year chart here. This was a $60 stock. This company consistently grew at about 14 to 16%, forecasting 12 to 15%. They had 2 quarters in here. It was April and July, where they only reported on target, no upside. So all the people that anticipated these guys to always beat the numbers sold, drove the stock all the way down here to $30. Then it got back on track, started beating numbers every quarter, again, a couple of pennies. And then you get to the spring of 2025, and you have the international tariffs that Trump put on that caused a lot of companies to do business overseas. This company does a lot of business with NATO nations and NATO defense organizations, especially the British. And it finally stabilized after all those crazy tariffs. But then you get to the fall of 25 and it melts down again. What happened here? This was the SaaS apocalypse. Software companies that bill by the month, almost all of them, from Microsoft all the way down to this company and everybody in between, sold off. The best ones sold off 30, 40%. Some sold off 70 to 80% and are still going down, like Adobe, like Nice Systems. The software group's starting to rebound, and all the other internet security stocks have already rebounded to new highs. As you see, this stock's got a long way to go to a new high, but I have no doubt it'll get there if they stay on the roll they're on. The last 2 quarters, they beat the estimates by almost 50%. So they grew 23 to 25%. They're still giving 13 to 15% guidance, but it's because it's what they've always done. But they are definitely getting more orders more quickly, and they're larger. And I think this stock's going to be a big winner. So it's TENB. The target I have on this stock for 2 years out is $60, and I would expect it to make new all-time highs 3 to 4 years out in the 70 to 100 range. Very little debt, lots of cash on the balance sheet. Wouldn't be surprised they made an acquisition along the way. Okay, let's go to the next one. This one's a little company, Ceregon Networks, ticker CRNT. Now, this is a tiny company. Let me warn you. Let's go to the chart. This company actually dipped below $2 twice in the last year. There are a lot of brokerage firms out there that won't allow their advisors to recommend or own stocks under $2. That's considered a penny stock. The majority of penny stocks wind up in bankruptcy. This company has a pristine balance sheet. $1.40 in cash on the balance sheet. This is a real company, 90 million shares. But be warned, if it dips below $2, it causes some robotic selling that might keep it below $2 for a few weeks, if not a few months. But it's an opportunity to buy. So what does Ceregon Networks do? Ceregon Networks significantly increases by a factor of 200 to 300% the capacity of a 5G receptor. When you go out and get a cell phone signal, half of the time it's 5G, half of the time it's 4G. But these phones have to operate in a certain bandwidth on the radio dial, and they can only fit so many calls or so many signals in that band. But what they've learned to do is they've learned to send 10 signals or 5 signals out at once, and they're all staggered. So that when the next tower receives it, it knows that the first dot of data goes in conversation number 1, second one goes in conversation 2. This company, Ceregon Networks, you add their equipment to those towers, and you can increase the 5G capacity by 200 to 300%. It's an Israeli company. They have a lot of competition. Qualcomm in the U.S., Ericsson and Nokia in Europe, and Qualcomm and Nokia fight over the third world with Huawei. India is the largest 5G cell phone market. It's even bigger than China. In India, the majority of the population has no laptop, has no desktop, has no television. They have a phone. and they watch video on their phone. And this video eats up bandwidth like crazy. India dramatically needs to expand its bandwidth because there are hours of the day you just can't connect on cell phone because all the bandwidth's been used up. And people will watch a movie for 2 hours on that bandwidth and never open up the capacity. So another thing important about India is that they signed a defense agreement with us, Australia, and Great Britain 2 years ago. All of our submarines are going to work in concert in the Indian Ocean. Part of that defense agreement was that India had to stop buying from Huawei, China's wireless company, as of January 1st, 2026. This company is in a perfect position to take Huawei's business in India. And in the first quarter, it was anticipated they'd get their first bit of business. The Indian companies don't have great balance sheets, so they tend to not order equipment until the cash comes in. They really don't have any borrowing capacity. So when the quarter came in, this little Israeli company beat the numbers, and they beat it with no Indian revenue. However, they got $48 million in Indian orders. Now, that alone doubles the company. They'll start putting that Indian revenue in the Indian orders in the revenue in the next quarter, and they said the majority of the orders are going to be installed third and fourth quarter. When they start producing profits that are 50 to 100% above what they did last year, I think the stock will be at least $5, could be $8 in the next 2 to 4 years. This is a trade. This company plays in swimming pools with big sharks, but they've got the best solution on the market. And India is desperate for bandwidth, so they want, and it will more than pay for itself to buy the best equipment. And they have to replace Huawei, and it's an enormous market. Now, this company has other markets. They work in Colombia, and I'm told they're very optimistic they're going to get into Venezuela with the new powers that be there. They're in a couple of states in the U.S. and in Canada. They're in a couple of European countries. But they're the smallest of the 4 big players. But supposedly they have the best equipment. And they're in Israel. So there's a lot of risk here. But they have no debt. They got $1.40 a share in cash on the balance sheet. You rarely see a stock trade below the amount of cash they have. And they should be producing Indian revenues next quarter. And India is an enormous market. This company could easily triple just from the business opportunity they have in India. And India used to buy everything from Huawei. So they got to buy the stuff from someone. They've got the biggest bandwidth problem in the world. Why wouldn't they buy from the best producer of equipment? So that's the play here with Ceregon Networks. And lastly, this is a company I've known for 4 years, and it's completely changed. But what it's doing now is very exciting. The ticker's DUOT, Duos Technology Systems. Again, this is a tiny company, even tinier than Ceregon Networks. Its market cap's only $200 million. Most S&P 500 companies are $200 billion, which is 1,000 times bigger, and most Russell 2000 companies, which are the 2,000 companies smaller than the S&P 500, most of them have market caps of at least 3 or 4 billion. This is a 200 million market cap company. But it's growing enormously quickly, and they're in a very exciting part of technology right now. Duos was founded about 10 years ago by a mad Italian scientist who was way ahead of the curve on artificial intelligence. And to make a long story short, he had developed a system of inspecting railroad cars instantly while the car was moving at 90 or 100 miles an hour, and it could automatically determine in less than 60 seconds if there was anything about its suspension or brakes that were defective. If they had this system on that train that crashed 2 years ago in Ohio and killed about 50 people from poisonous gases on the cars that crashed and let dangerous chemicals into the air, that accident would have been completely avoided. They have to set up data centers with NVIDIA GPU chips to do this instant analysis. And one day, someone approached them and said, boy, my university would love to be able to use your GPU chips when a train isn't going by. And trains don't go by this particular testing station 21 of the 24 hours a day. So they said, that's fine. When a train's going by, we're going to cut you off, but we'll charge you half of what other people would charge you. And then they started getting flooded with calls from other people that wanted to have this access at a lower price. Fast forward 2 years and new management, they spun off 3 other businesses they had. They just got done selling the railroad monitoring business, and now they are a pure play on NVIDIA data centers. And what makes this company so unique is that they can build the data center in 60 days or less, and they build it with its own power. And their data centers don't require water to cool off the servers. They've got this patented structure of the data center where the air flows at high speed through the data center, and it keeps all the machines cool with just air conditioning and high-powered fans without any water. All the water that's needed is what goes into the air conditioner, and the air conditioner recycles that. They've built 15 of these. They plan to build 50 in the next 2 years. They've had 3 venture capital firms pump $100 million into the company. Those venture capital firms paid $8 a share. Now, those of you that haven't been through MBA school or worked at a venture capital firm, a venture capital firm looks to increase its money 500% in 5 years because half the companies they invest in don't work. So they wouldn't be pumping money into this company, $8 a share, if they thought it was just going to 15. They're doing it because they think it's going to 50 or higher. And this company hasn't produced a big breakout revenue quarter yet. They're going to in the 3rd and 4th quarter of this year. And there's really no limit to where this company can go. There's no competitors. And all the other big data storage systems are getting held up because they don't have enough power, or the locals are not thrilled with the idea of this big center being built, driving up their electrical costs and sucking up all their water. And even if they do get these things approved, it takes 1 to 2 years to build them. These guys can provide data capacity in 60 days. It's hardly anyone ever knows about them. Here's the best part. They try to sell this stuff directly to hospitals and universities because they're not building massive systems. They're building little systems that can be built quickly. And those type of clients, their capacity needs meet what these centers can do very well. These centers can handle like 3 hospitals and 2 universities very well. But if they don't have a lot of those clients signed up within 90 days, they have agreements with Verizon and Comcast and 2 other private companies in data storage where they'll buy all their capacity and they'll make a 40% profit margin instead of a 60% profit margin going directly to the end user. My point is they're never going to build one of these things and not find anybody to rent it out. Those larger data storage companies, cloud providers, have told them, we'll buy all you want to sell us at this price. So this company makes one of these data centers for about $8 million. And it will generate $3 to $4 million a year in revenue. And the data center is pretty much self-contained. No real repairs needed, no real costs to run it for about 10 years. The stuff's warranted for 5, and the other 5, the company's very confident that the quality of the equipment they're buying has 15 to 20 years life. First 10 years shouldn't have any issues. So if they're earning $3 million on an $8 million facility, and it shouldn't really have any additional costs for the first 5 years, which is how they're depreciating the equipment. That's $15 million over 8 years, and then the equipment's depreciated, and they should easily make another $15 million. By the way, most of their contracts are 5 or 10 years. So you're going to have a company here within 2 years that's going to show about $50 to $60 million in recurring revenue, growing it at 50 to 60 million a year for the next 3 years. On the low side, this is a $25 stock. This could easily be a $50 to $75 stock. The breakout quarter is the one they're going to report in October, but the one they report in August will give you progress on how many of the centers have been opened and how many of them have started to build the end client. They build these centers 15 at a time, because at 15 at a time, they get great discounts on the equipment, and they have very strong relationships with Generac, who provides the generators, with Asset Brown Bavaria, who provides a lot of the wiring, and with NVIDIA, who provides the critical chips. They were one of NVIDIA's first GPU customers. They go way back with Jason. And as long as they buy the chips in bulk, they don't have any problem getting them. So this is a very unknown company. None of the major wire houses cover it with research. There are 2 or 3 specialist microcap analysts that cover it. And if you read their research reports, they have targets in the neighborhood of $24 to $40. I think under 12, your risk reward is excellent, because this company has $6 a share in cash. And if you can buy it less than 12, you should. But this is a 2 to 3 year play. But downside, you got maybe $4. Upside, you got 30. This is one of my favorite opportunities. That's all we got for Fantastic Friday, folks. All 3 of these were very high risk. This was not financial advice. Make sure you can afford the risk if I'm wrong.